It's a fun one because I think from my perspective, once you pay the cost of insurance and the fees, and that's out of the way, all the rest of the money is going to work for you. And so, of course, a lot of people probably don't know we created this for ourselves. So we had no intention of taking this out to the market. And in the creation of that, the first thing that we wanted to do, having the 35 plus years experience in insurance products, is reduce all the fees and expenses and costs so that we could get the maximum performance. And that's what we did.
Can I kind of put this in perspective? I think most people look at the typical life insurance they buy, which is the minimum amount of money they can put in to buy whatever death benefit they're going to get. They are correct. That is an expensive asset class. To give some perspective, doing it that way, the average cost of a typical life insurance product is going to be 6% a year cost, right? So really inefficient. The way we're doing it, I know from my policy, because this one's branded into my brain, the average cost of life expectancy is less than 45 basis points. So half what the usual money managers are charging, that typical 1% fee and all the rest of it.
You know, as a female, that mine's cheaper.
Yeah, that sucks. But I think the point here is, the point we show these and we train to these is life insurance. First of all, don't forget those costs are paying for protection, not just investment return, the death benefit, the living benefits, and so on. But the other side of the coin is we also point out they're not short-term investments, so they have more front-loaded costs and lower back-end costs, whereas my stockbroker, money manager, those sorts of things, typically what happens, they start off cheap, but as my money builds up, they become more expensive in terms of absolute dollars. It might be 1%, but 1% of $100 is nothing. When I build my portfolio up to $1 million, 1% now becomes a real amount of money. So the crossover point is typically around year 10, something around that point. So again, he's saying something, but it's kind of either just missing the point entirely, or he just didn't look at what actually is being done. So he kind of used a generalization of the industry and then said, therefore it applies to something that's designed completely differently.
I think that he generalized all the cost into one bucket. And what he was doing is he was taking trust fees and taking that out of context. So let me just explain the trust fees. If you want to be able to borrow from a bank without being party to the loan, without signing personal guarantees or going to credit checks or make interest payments, that policy has to be secure to the lender. And in order to do that, we have each client set up a trust. The client's only making 5 payments. This plan is designed to work for 15 years before we repay the loan. And so we need to collect those trust fees in a 5-year period of time, but those trust fees are escrowed for a 15-year period of time to cover costs.
What you're saying, just to summarize, you're collecting all 15 years worth of trust fees up front over those 5 payments, which if you do the math means the trust cost is $450 a year if you average it out over the 15 years, right? And by the way, to get a national trust company to do it at that rate, we went around so many trust companies, and the vast majority basically said they wouldn't get out of bed for less than $1,500 per year.
Well, and if you remember ours started out at $2,500 and then $100 a year or something.
But the point here is that, again, it's one of those things where somebody hasn't spent the time to really look at what we're doing and just made this sort of knee-jerk reaction based on experience of the past. A lot of what he's saying is judgments that he has made based on previous experience that are nothing to do with what we're doing.
Right. And then the other part was the cost of the policy. We've covered that, but I think that there's a couple of other points that needed to be added to that. Not only have we worked with the carriers, well, first off, let's go back a little bit. Not all products are created equal. So this has nothing to do with whole life or variable life or universal life or index life. We just went out into the marketplace and looked at all the products in general, determined that the best fit for this type of financing was the index products, but not all index products. Then we did all our due diligence with all the index products, and then we determined which ones would work in this structure, and then we went to the carriers and we worked with them on minimizing the cost as much as we could, eliminating a lot of the waste of things that were in there that didn't need to be in there for what we were trying to do with the financing, and then optimizing every single year. We work with them to optimize it.
Can I again jump into this,
yeah.
Right? What are we trying to do in Kai-Zen? we're not trying to say that this investment, the IUL, is better than a stock portfolio as an investment. We're not trying to say that. We're trying to say the problem is people don't have enough money in play. So the step one is, let me figure out an asset class that allows me to bring a bunch of leverage in. So I'm sorry, I can't use your stock portfolio to get a 3x leverage on it without you having to be on the hook for the loan with personal guarantees, just like a margin loan, for example. The
Right.
margin loan is giving you 50 cents on the dollar, not 300 cents on the dollar.
Right.
So step one, get me more money in play. That's how the rich get richer. They have more critical mass of cash. So let's also understand the problem we're trying to fix, which is chronic undersaving. We're just not interested in getting in the game of which is a better investment, because that's a subjective call based on your risk tolerance.
That's all good information, but in addition to that,
Was that a yes but?
yeah.
Good information, but actually I don't care. Right,
No,
okay,
no,
cool.
no. It wasn't that I didn't care. I was going to
Ouch.
just add some additional,
Just stab me now.
just add some additional things to that many people don't know. We've done other things inside this policy to reduce costs that the typical agent would not do with the client that we needed to do to ensure that this design was going to work and deliver the benefits.
So in other words, don't use generalizations on life insurance as a critique on Kai-Zen until you've done your own homework.
Correct.
Is that a good summary?
That was a much better summary.
I'm just trying to get back.